Hey everyone, my name is Gary Taylor. Welcome. I am very excited to introduce you to a new strategy today called the Leveraged Edge Strategy that was designed for leveraged ETFs. I think you're going to get a lot out of this presentation, and I'm very excited to begin with how this came about. This was the brainchild of a guy named Floyd Dameron, who started working on this about 4 years ago. Initially, it was very much a manual process, a lot of hours spent with an Excel spreadsheet and figuring out what kind of rules would be best to use. And eventually, a guy named Rick Keller came along to help Floyd. He assisted Floyd by developing an Excel program to automatically do the back testing for Floyd. Rick is a very accomplished, very good Excel programmer, so he was very capable and able to do this in a good, proficient manner that really sped up this whole process. With that, the backtesting was developed to show very good results based on the initial rules that were developed, and after some tweaking, that got even better. That's roughly about the time that I got involved looking at trying to port this over to being usable on TradingView. I thought that if we had this as a tool that could be used on TradingView, that it would open it up to a lot more traders and investors to use. I've had it on TradingView and available to invite-only users on a private basis for about a year, and have around 100 authorized users who have been providing some very valuable feedback about the tool, and that's helped us fine-tune the performance and fine-tune the rule set even more so. It's been a very exciting process, and I really appreciate the help that all of those folks have provided with that feedback. With today's presentation, I'm going to talk just for a minute about the advantages and opportunities with trading leveraged ETFs. And then I'm going to explain to you what the leveraged edge strategy is about. I'm going to explain some of its strengths. I'm going to show you what it looks like on a TradingView chart. I'm going to get into a little bit about the setup. I'm definitely going to go into the performance, how it does in backtesting across different time periods, short, medium, long-term type time periods, and different market environments. And then I will get into a bit about backtesting and the role of backtesting with helping the strategy from a couple of different perspectives and helping you from a few different perspectives as well. And then touch on the strengths and limitations of the strategy and what next steps you might take if you want to pursue this as a tool for your tool chest. So that's what this is going to be about today. I need to start out with a little bit of housekeeping and touch on the disclaimer. This is for educational and entertainment purposes only. I'm not a licensed financial advisor. The Leveraged Edge Strategy tool is designed to assist with buy and sell decisions, not to make them for people. There is a significant amount of risk in trading leveraged ETFs. You need to be aware of that. Please read the text on this slide, as it's very important, and from there I will move on with a little bit about the advantages and opportunity with leveraged ETFs. I think everyone's aware of the potential. We're talking here about 2x, 3x, and sometimes even 4x type leverage. there's a lot of corresponding risk that goes with that high performance potential, though, too. The nice part is that generally these are comprised of very high quality components, which is very important as far as the success of these instruments. It really helps to compare the leveraged instrument to the primary vehicle. So what I'm talking about here is you might compare the TQQQ, the 3x leveraged ETF for the QQQ to the QQQ to see how it compares and understand what the components are of the QQQ, being the NASDAQ 100 stocks, actually the best stocks, the NASDAQ 100. And understanding that gives you a sense of the character and how the ETF and leverage ETF is going to operate over time, which then gives you a little bit of a performance expectation because don't markets and indexes tend to go up? And of course, leverage ETFs as well. These, in many cases, based on indexes, correspond with semiconductors, with software, with other high-tech ETFs, which have a very strong growth potential. They can also be around very large mega cap type stocks like the Magnificent Seven as an example. And an example of this would be FNGU, another 3x leveraged ETF. But these are typically very high growers. The trick with this potential and advantage is having a good strategy to help you capture the returns and do so in a way that helps reduce the risk involved and certainly reduce the drawdown involved compared to doing, say, a buy and hold type investing methodology approach. I don't think is an ideal strategy out there for working with leverage ETFs. But if there were one, I think we could imagine what it might look like, what it might be composed of. And if there were, I think we would expect it to have exceptional net profit returns that would come from short-term, long-term, medium-term time periods. That would be competitive with buy and hold, hopefully better from a performance perspective, and would be usable with most of the major leveraged ETFs, such as the list that's on this slide. Plus, you'd want something that provided lower risk than doing a buy and hold approach and had reasonably consistent type of results. And you'd want to see some evidence around those results. You'd want to have some kind of evidence that would give you confidence that the rule set driving the strategy is a good rule set. And you'd want a strategy, too, that offers flexibility because not everybody invests the same. Everyone's got a little bit different style, so you need some flexibility in there for individual users and how they like to invest and their risk tolerance. And then you need something that's relatively easy to implement and will be implemented accurately. And if you think about it, I mean, is it a strategy that needs training? And if that's the case, is there training available for it? Now, we know that there's no real ideal strategy out there because all of them have their strengths and their limitations. They all have weaknesses, including the one I'm talking about today. But these are a lot of the things I think you'd want to look for in an ideal type strategy. Leveraged Edge ETF, Leveraged Edge Strategy is a tool that's designed to assist investors and traders with buy and sell decisions. It has a custom rule set that's developed around multiple stochastics that are selectable within settings. It is a rules-based custom program, and a lot of times it's just referred to as the EDGE strategy for brevity's sake. But the key here is that those rules are relatively easy to use and to understand. I'm not going to get into rules today, but there is training available for them on the website. It's important to know and understand them because that helps you anticipate what the strategy is going to do in a day-to-day type environment. It's based on data-driven signals. It uses back-tested algorithms to generate buy and sell signals. And this minimizes the emotional aspect of trading these. It gives you a more structured approach, which is extremely helpful when it comes to leveraged ETFs. The parameters are all customizable, easy to change, but we do provide predefined settings. And this is to help get you started, help you get initially set up, make sure that it's operating correctly for you and accurately for you, and that it's going to give you some type of consistent results based on those settings. And they're ones that can be adjusted. The whole idea is to provide you with that flexibility based on the way that you want to be trading these leveraged ETFs. There's risk management controls. There's stop loss. There's take profit. There's risk management to help mitigate and make the risk less than doing a buy and hold approach. And it's also designed to reduce drawdown and make it easier than trying to do a buy and hold approach. And the performance is all evidence-based. There's lots of backtesting information available on the website for you to take a look at. And once you actually have the tool in hand, it's very easy to produce that same backtest information yourself. And that helps validate the performance and what this tool can do. Speaking of performance, let's look at some different backtest results for a minute. This particular one is an almost 6-year period and looks at the buy and hold performance of 3 different leveraged ETFs, the TQQQ, SOXL, and FNGU, over that time period. So this goes from early 2019 through the third quarter of this year. If we look at the performance, we can see how the EDGE strategy compares to buy and hold over that period of time. And the top portion here is based on percentages. The bottom portion looks at it from a dollar perspective. If you had invested initially $1,000 and reinvested the profits at 100%, to give you a sense of how the EDGE strategy performance would compare with buy and hold over that period of time. We can also look at that same period of time here in purple with the same 3 leveraged ETFs, compare it to how would that look over an 11-year time span, more of a longer term. And in this case, we're looking at the calendar years beginning in 2013 and ending with 2023. The only thing that we can't provide results for is the FNGU because it hasn't been around that long. But you can see how it performed over a longer term time period. So there's some consistency. The strategy has stochastics that can be run based on a daily or a weekly version of stochastics. The strategy itself only runs on a daily chart, but the stochastics can be adjusted to work on either a daily or weekly basis. And this is important because the characteristics are a little bit different for each. So I wanted to show you how they compare. If we look at individual years for that almost 6-year period, thinking about if we decided that we wanted to use this strategy or try this strategy out, and let's say we just started the beginning of the year 2020, we would take the first strategy recommended buy as an example and enter, and then exit at the last trade of the year or when the last trade closes at the end of the year. And if not the end of the year, no later than the first week of the following year. And in which case, in 2020, it would have had 36 trades, a drawdown of just less than 17%, profit loss of 145.6%, compared to buy and hold of 66%, and a drawdown with buy and hold of 69%. That's the thing with leveraged ETFs. They do tend to have a fairly high drawdown. If you look at from a buy and hold perspective, these numbers are generally pretty high on a year-by-year basis. So this top portion is using the daily stochastics version. The bottom portion uses a weekly stochastic version, the top in blue, the bottom green. And you can see the difference here. The daily average number of trades each year is 27 versus 5 for the weekly. So significantly more trades using the daily version. Profit, generally speaking, I found is a little bit higher on the daily, but in this particular example, the weekly actually comes out looking better than the daily, with 92% versus 86% as far as the profit loss on an average basis for each year. Compared to buy and hold, it's a pretty good performance boost. 62.2% versus the strategy at 86.6. Down here, 85% versus 92%. But the important thing here, too, is the drawdown. The average drawdown going from 50% to 20% is pretty huge, I believe, and pretty significant. Drawdown can be pretty tough. And the other thing is that this particular year, 2022, that is still fresh in a lot of our minds because a lot of people got hurt that particular year, performance-wise. Buy and hold would have had a loss of 67, almost 68%, which would have decimated a portfolio compared to the strategy having a 7.5% loss for the daily version, actually a 5.5% gain for the weekly version. So pretty good for a strategy for that time period. And then if we look at this on a year-by-year basis, and I just did this for the daily version for simplicity, but I wanted to give you a sense of how this would look year by year for the TQQQ for each of these years versus looking at SOXL for each of these individual years. SOXL has a little bit more volatility. And then the FNGU on a year-by-year basis. So comparatively, you can see some pretty strong differences between buy and hold and the strategy for each of these different leveraged ETFs. Look at the chart on TradingView now and touch briefly on the setup, but this is a TradingView chart and it shows the candlestick prices up here on the top, and it shows where the strategy has a particular signal doing a action In this case, it's a buy signal, buying a number of shares based on the strategy. This is an exit, and this is a profit target reached, which involve a sell and then in this case, a rebuy right after that because the strategy thought it would still continue going up, and it did. So you have the signals up here on the top. This is the actual strategy tool down here with the leveraged edge strategy name here on the left. And it's hidden by these numbers right now, the blue and the yellow numbers, but there's a little thing down here that you can click on that is going to get you into the settings, and I'll show you that here in a minute. I can tell that this is a weekly version of the stochastics because of the stair-step looking lines here. Each one of these represents a 1 week period in time. And there are signals on this as well showing S for sell, R for rebuy, S for sell again, and B for buy over here that correspond to the signals up on the price. Down here we have added a additional indicator. In this case it's MACD, and there are several additional indicators that can be added to the strategy to help boost performance, reduce drawdown, and reduce the number of trades. And we'll explain to you which ones we found through our testing have helped. We'll provide that information to you. So that's the weekly version. This is the daily version. Same setup, looks pretty much the same. Signals up here with the candlesticks. The lines down here are smooth now, though, instead of jagged or stair-step looking, as this is a daily stochastic time frame. And then down below here, we have what we call a strategy tester, which is a tool that TradingView provides that can generate backtest information based on parameters that we put within the strategy. This is the little icon that you would click on to get the settings up where you could see them, and I'll show you that in a minute. There's a very similar one over here, right about here underneath these numbers, which you can't see right now. This is what the settings would look like. It shows you information about the stochastic itself, the time frame. We have 3 different types of stochastics in there that you can choose from depending on the character of the leveraged ETF. Different settings that can be put in for the stochastic, and will help you with recommendations. Trade settings for putting in your stops, a profit target. We have different sell parameters and buy parameters. The thing here is that we have these little tooltips along the right-hand side, which you can hover over, and that will help give you additional information about what we're trying to do with this particular setting so that you can use it more effectively. So in this particular case, for this setting down here, where we have an exit level, this explains it as it's based on sell rule number 1B. It's a cross under level exit. Strategy will exit if the fast line crosses below the slow line above and then drops down. The fast line drops down to this particular level. So there's another tab. There are actually 4 tabs within settings. The input and properties tabs are usually the only 2 that we need to do anything with, and those are explained in detail as part of the training. The strategy tester I mentioned by TradingView can be brought up by clicking on strategy tester here, and then you can click on overview and see, based on Down here underneath this trade range levels here, you can input dates for starting and ending a backtest, and that then would generate backtest data. In this case, it would show a net profit of $702,500. That's key because if that's what we tell you in the settings that we would like to see as far as a result, it helps you confirm that you have inputted the correct settings going through this process. If the setting doesn't match, then you know that there's something wrong with the setup that you've done and that something needs to be revised a little bit. This is that settings tab, the upper half of it and then the lower half, because I couldn't fit it all in one screen, just too long. But you can see how these kind of correspond with what we have over here. This is the symbol, the TQQQ, and we have a stochastic type proprietary and D for daily. So here's your D for time frame and proprietary stochastic. And then we've got the settings over here, 2014-4, which is input here. And then down below that, we've got the trade settings, which correspond with these. The 11% for the trailing stop, the 5.1% for the PD stop, 16% for the take profit. So that corresponds in the same order. We try to make it as easy as possible to provide you with predefined suggested settings to get you going that are easy to implement and easy to put into the tool on TradingView. There is an ability to add a second indicator, which is over here. It's called external indicator. There's 3 basic settings for it, and we provide you with the information for that. If there is a secondary indicator that has proven to provide additional performance, we'll give you that information on the spreadsheet. You can see what that did in this case as far as reducing the number of trades from 172 without it to 161 with it, and how it's improved performance from 196,000 up here to using the extra indicator 262,000 down here. So a pretty significant bump by adding on that additional indicator. I showed you how we had backtest results and could do settings for both daily and weekly types of stochastics. Here's what the spreadsheet would look like, showing those side by side with the settings parameters here on the left, and then the daily on the yellow color here, and the weekly in the green color over here. So you just have to determine which one it is you want to use and input those particular settings, and that will get you started. Let's touch on testing for a minute, back testing. I mentioned earlier that that's what we use to provide evidence for how a strategy performs and to validate the rule set. This is a key part of developing trading systems. It's used by financial analysts, investors, risk managers, etc. And it's really the main way of getting performance measurement and statistical evidence with individual trades for doing backtests. So it's a real key tool that goes with the strategy. It's going to use historical data, or people would use historical data to evaluate the performance. And you got to keep in mind that no matter how good the backtest looks, chances of you being able to duplicate it are pretty slim. There are always going to be things that will interfere, and backtests are sort of an automated process while we're operating on a manual basis, so there's going to be differences. But backtests will give you visual behavioral evidence across different types of markets about how a strategy will perform. It'll show you what it will do across different time periods, and it's great for comparing against buy and hold and other strategies. I was going to talk about key strengths of the strategy, but I think it's really important to understand the limitations. I mentioned before that chances are we as individual traders are not going to have performance results like we see in the backtest data. And that's because the strategy is not a perfect strategy. It's not an ultimate strategy. It's not one that you want to follow blindly. It does enable you to explore bad trades or losing trades in the backtest. And that's helpful because it can help you understand how you might address those in a real-time basis. How might you have traded them? And that can help you on a daily basis. The orders in this are all done at closing price, and that's very tough to match. If you try to enter an order and capture the last price of the day, it's near impossible to do. So your prices are almost always going to be off a little bit compared to the strategy. That can be better or worse. It's hard to say, but there are going to be differences. The strategy has poor performance when it comes to sideways or choppy markets. This is pretty true for most strategies that are out there. It's pretty common. You should expect this to happen. So if you're not confident about the direction of the market, just wait. Take your time. Stay in cash because getting stopped out multiple times can be very costly and it can hurt with this strategy. If you do get a buy signal, if you're not sure because the market looks kind of iffy, it looks like it's not acting right, take your time. You don't have to make a buy immediately. You can wait a day or two or three and try to get some kind of confirmation that it's going to go in the direction you think it's going to go. Take your time. The website has some training around a draft set of tactical rules to help deal with these sideways or choppy market conditions. And there are things that'll help you determine should you or should you not be taking a buy, or certainly things to think about before you take that action. I say that it's a draft set of tactical rules because I'm hoping that someday we'll find something better. They do help. It's been proven in some of the back tests that we've done that the results are better using these to help mitigate those sideways markets, but they're not perfect. They've still got drawbacks, and there is probably something better out there at doing this kind of thing. This shouldn't be the only tool that you're using for trading, for investing, whether it be on leveraged ETFs or stocks or other types of instruments, but consider your other tools and what are they telling you as far as the market condition, and are you making money? Are you being successful with your trades? If most of your trades are wiping out or getting stopped out, then and you're not getting any gains, then chances are it's a market environment you don't want to be in, and you want to be in cash instead. These are different limitations or weaknesses that it's important to understand. The alerts that are available with this are good. They work well, but alerts are never 100%. I've seen alerts not happen, and it's the kind of thing that you don't want to rely on 100% of the time. So it's good to understand how the rule set works and be able to anticipate what's going to happen so you don't have to rely on alerts all the time. The interesting thing is sometimes you will see an alert to make a buy when you already have a position. Don't be alarmed. That is a confusing but a good thing maybe, because the strategy is learning based on the condition that it's seeing and not necessarily knowing that you've already got a active position. So that can be good if you've already missed the initial buy and are looking for a way of getting in. You're going to get a signal to help you with that. Or if you're already in and have a position and are looking at adding on to that, you want to do an add-on buy and are trying to figure out where to do it. That's another thing the strategy may be able to help you with. So actually confusing, but maybe on the good side. Now, from the standpoint of strengths, it's appropriate to talk about them a little bit in that we do provide the settings to help get you going. It makes things a lot easier as far as using the strategy, getting it up and running, and trying to get the best performance out of it that you can. And also helps you to confirm that you've got the correct setup. It gives you that confirmation. So that makes it a little bit easier to use the strategy and a little bit more accurate and reliable, I believe. You can get a visual of historical trades with the strategy, so you can see how it's acted in prior market conditions, and you can go back and compare how it operated then when, if you got the similar types of sale or buy signals today, how would you handle them? The TradingView platform has a couple of nice things that can be very helpful too. One, it has the ability to do some paper trading, and that's a great way to get to know the strategy, is to start out by using paper trading as a way of learning how this operates and using it without worrying about potential of losing any money. TradingView also has the ability to let you go back and look at a particular trade and do a replay of that trade. So you can look at the prior candlesticks before the trade executes and see how it's progressing through those candlesticks without being able to see the trade out in front in the future. And then when the condition arrives where you have to make a decision to, well, follow the signal, whether it's a buy or a sell, you don't know how it's going to turn out in the future because of that replay feature. So it's a nice tool that really helps with the strategy. The other strength is the transparency of the strategy, all of the backtest information that's provided, so you have a good understanding of how it's going to work, at least how it worked in the past, and you have some validation. It's very flexible, it's very easy to change parameters, works with a lot of different leveraged ETFs, and you can choose between doing that daily or weekly type approach. You can change the settings to fit your own style and risk tolerance. This is probably usable with other leveraged ETFs that we just haven't tested with yet. A lot of 2X and just plain old regular ETFs that we haven't checked out. So there's, I think, a lot more potential with this than what we're showing you today. And you can add that additional indicator, which can help a lot from a performance perspective. So in wrapping this up, do your due diligence, make sure you really understand the risks involved with trading leveraged ETFs. Research some of the other leveraged ETF strategies. Make a decision on which one you might want to use, if any of them. If you are going to go down this path, I mentioned in the slide here that it's very helpful if you already have a good background in trading stocks, some good experience trading, and market experience is very helpful with being successful with leveraged ETFs. Understanding trading psychology and being able to be a disciplined trader is also very helpful. And this should just be one of hopefully your primary tools for trading and investing leveraged ETFs. Hopefully you've got a few other tools that you work with that are also part of your arsenal, part of the methodology that you use. And hopefully these tools will all complement each other with your approach to investing and trading. Next step would be to visit the website, leverageedge.com, to find out more. And there is another video available on this channel that looks at some of the best strategies for leveraged ETFs. That's also available at the website. And with that, I will wrap it up. Thank you very much for your time today. I really appreciate it. And good trading to you. Thank you. Bye now.